Hello, everybody, and welcome to today's Barchart webinar. My name is Jean Baker, and I'm going to be your moderator today for a workshop that is going to give you some really good ideas on how to use our stock screener to find better informed trading opportunities. All right, well, if you sat in on our last educational webinar, you had the pleasure of learning from a guest educator, John Rowland. Well, John is back with us today, and just to give you a little bit of background, John is a financial markets educational consultant, and he has years of knowledge about the markets, including risk management strategies, and he's very knowledgeable about the topic that he's going to be presenting today. He started his career as a floor broker, worked as a natural gas and energy specialist, and has also taught advanced trading concepts, most recently in a course setting. So now he has joined the Barchart team, and he's going to be leading today's discussion on how to fine-tune your trading strategies using the Barchart screener. So a few housekeeping notes here. This webinar is being recorded, and you will get an email a little later on today with a link to the recording. And all of our archived webinar recordings, you can also find them in the tools menu on the Barchart site. There's a page called free webinars, and you'll see links to all of our archived webinars there. I do want to mention, as you see up on your screen, that this webinar is strictly for educational purposes, and any decision that you make to buy, sell, hold, or trade in securities or other investments, it does involve risk, and make your own due diligence, do your own due diligence, and we are really not presenting this information today as a recommendation to purchase. So with that, I am going to turn the controls over to John. John, hello, how are you?
Hello, everyone. I'm so happy to see everybody here. But I'm guessing that maybe some of you folks are here just because you want to get out of the heat today. So I hope everybody is cool and is ready. I want to thank Jean and the Barchart staff for having me back, and I'm excited about showing you guys some ways to make our lives a little bit easier as traders and using the tools that are available to us in Barchart. So that being said, I'd like to get started if it's all right with you, Jean.
Yeah, sure. Go ahead, John.
Oh, yeah. Okay, thanks. So why do we use a screener? What is the purpose of a screener besides just eliminating stocks or equities or any assets that we're looking at to refine or to pick greater opportunities? So a screener helps us filter out that white noise, helps us to quickly find some greater trading opportunities. That's the obvious reason, but a screener does provide for us a lot of other ways to improve ourselves as traders. And one of the ways that what a screener is going to allow us to do is to improve our tactics, our daily routine, right? How we look at the market, how we define certain trading opportunities. Think about it in terms of a discipline, right? If you were going to learn any new discipline, for instance, let's say martial arts or yoga, right? You would have certain exercises that you would do as you start your routine, start your day, start your discipline. And so one of the things that a screener is going to allow us to do is to improve on those tactics, to get those exercises, those muscle memories. In this case for us, traders' muscle memories to help us find better trading opportunities. And inside of that daily routine, we're going to look at points of reference. And the points of reference are going to be static numbers for us. But again, these will be exercises that we're going to do as a trader. Now, as we work through the screeners, I want to be very upfront with you guys here. I'm going to start from the basic level. I want my traders that are in the room that are new to trading or less experience, I'll call you my junior traders, I want to show you that just some very basic points of reference will allow us to do some very complex strategy screening opportunities. For my more advanced traders that are in our webinar today, I will ask you to have a little patience, and that hopefully by the end of our webinar this afternoon, we will get into some more advanced strategies. So, my more advanced traders in the room, we know that patience is a virtue, and that a lot of times we got to wait to find that greater trade. So just give me a little patience. So let's build some knowledge for our junior traders so we can move to the more advanced. All right. So yeah, just basic points of reference will help us narrow down the field of stocks that we're going to look at. We're going to look for things called positive expectancies. And one of the things that we're going to do is these positive expectancies, or what we anticipate something is going to happen, a number or a calculation is going to say, if this calculation is correct, then we can assume or expect a result, A plus B equals C. In other words, I'm going to look for strategies or inputs, filters that are going to help me find the positive expectancies that I want. Now, what I want to do as for junior traders is our daily routine and our tactics are going to help us identify price structure in terms of maybe price recognition. What does it look like on a chart, right? And as I get more efficient and I get more experience, then these price patterns, these recognitions are going to help me find those strategies. So these positive expectations will help us to find those price patterns that we're looking for. Our screeners are also going to help us employ our strategies. What strategies that we're going to look at? And we have two categories of strategies we're going to look at. We're going to look at something called autoaggressive signals. These are trend following strategies. These are the ones that are going to help us identify more our trends that we're going to look for. Now, for this discussion today, I think what we'll do is we'll just look at uptrends. We'll look at uptrends because most of our junior traders in the room are probably not ready to start looking at learning how to trade markets from the short side or taking short positions, but certainly learning how to look for those bull trends or uptrends. So we'll look at some signals or filters that are regressive, auto-regressive. But we can also look at other signals that are what are called mean reversion or data corrective. In other words, these ones might tell us that our trend has been extended or our trend is exhausted it itself, and that price could come back, or price could have a reversion back to what we call the mean. And a lot of the strategies that we're going to employ, points of reference, positive expectancies, and these strategies could serve multiple purposes for us. So here's some examples. And now, again, I want to be very straightforward. I'm going to give you guys a lot of examples here, but these examples that I'm going to give you are not gospel. And certainly a junior trader, I'm going to make it simple and easy for you. But a more advanced trader, as I become more advanced and recognize price patterns and understanding strategies, some of these things that I'm showing here might not fit in your strategy, or you might find them very elementary. And that would be certainly what I would expect from you, right? As you grow as a trader, you're going to look at other things. But notice that we're going to just keep it kind of simple here. So points of reference, we're going to look at last price. We're going to look at change in price. We're going to look at highs and lows. We're going to look at the opening price, and we'll look at something called volume. For some positive expectancy filters, we'll look at something called beta, true range, and correlations. How does our stock relate to other stocks? How does it relate to stocks in its sector? Or how does it relate to stocks of the broader market, the S&P or the Dow? And what I should have probably put in here is also something called comparative analysis, or comparative comparative analysis in terms of uh, what's the word I'm looking for? Relative strength. That's what I'm looking for. Relative strength. Some auto-aggressive filters would be moving averages, MACDs. Here's relative strength again. Gaps, all right? These are definitely some positive expectancies. We'll see when markets gap up. There's a reason why a market gaps up. And note that our tendency is that trend is going to continue in that same direction of that gap. Some mean reversion filters, Bollinger Bands, again, RSIs. Here we can see where we're using it as a corrective analysis. Stochastics, these are some other ones that we can look at. So let me share my bar chart. And so here's our main page bar chart. And I'm going to go to stocks. And right here under stock screeners. This is going to take us to our stock screener page. And this is just a basic, right here, basic start of our stock screener page. Without even putting any filters in, let's just look at what a stock screener is telling. We can filter by the name, by last price, by the different exchanges, the industry the stock is in, the sectors, and the time. Here's the exchanges. Notice I just have the name and the exchanges here. We have the NASDAQ, we have the American Exchange, or what has become the S&P market, and NASDAQ. So how many of these stocks are there? And if we looked at our results, we would see that there's about 4,800 stocks, a lot of stocks to look at. And if I was going to look at all 4,800 stocks on a regular basis, well, by the time I found a good trade, the day or the week or maybe even the month might be over. So I want to start looking at some filters that I'm going to add to my screener. So if I come down here, there is an arrow here that it will categorize our filter to large groups: price and volume, prior day prices, highs and lows, gaps and changes, support and resistance, technical analysis, bar chart opinion. This one will go right to some screeners that'll give you the opinions that are based on analysis that Barchart does. Opinion indicators, key statistics, general analysis from analysts or estimates. And then here is price pattern recognition, candlestick pattern recognitions, all right? So let's start with the first one, price. Price and volume. Now notice if I click on price and volume, that next to it comes this box here, which I can open up. And here are the inside of the price and volume are some of the inputs or filters that I can use in my screener. So I'm going to add these to my screener. So this one is one of the ones that for my junior traders, I'm going to probably grab a few of these out of here. These are just going to be some of our simple points of reference. So the first one I'm going to look at is last, and I'm going to add that. Why do we look at last? Well, last is important for us because we want to know where the last price is of our market. And as I become more experienced and I become more aware of the markets that I'm trading, I'm going to remember certain prices. I'm going to remember prices of support. I'm going to remember prices of resistance, and that I might be waiting for price to return to that value. So I'm going to look at last, and that's definitely an important input for me. I'm going to look at open. I'm going to add that as well. Now, why do I look at open? Well, I want to know where my market opened from yesterday, and did it open higher? Did it open lower, right? And now I can do some of that comparative analysis here, right here. I have two reference points. I'm going to look at my open price, and I'm going to look at my last price. Did the market open higher, and now the last price is even higher? My market is trending higher. Or did the market open lower, and now the last price is higher? I kind of like to find those kind of opportunities, especially in a very strong uptrend market. Or did my market open higher and now the last price is lower? Here's a market that opened on strength and then is now trading lower. That might be a cautionary tale if I was a trend trader. Now, if I want to change how this is going to lay out in my screener, notice that open is my first input, my first filter. If I just want to change it, I can drag these three lines down here, and I can move open behind last. The next one I'm going to look at is something called price change, and how much has price changed from yesterday's closing price. And I can do last change over the last 5 days, month, 3 months, 6 months, 9 months, year to date, 52 weeks. So there's a lot of different changes I'm going to look. Now, I'm going to set this screener up for what I would call more of a day trader style trading, and for more of a swing trader style. And I'm going to cast a much wider net. So I'm going to be very general here in terms of setting these filters. So I'm just going to look at last price change. Again, I'm going to add that, and I'm going to move that behind my open. Again, here I can do my comparative analysis, where is how much has my price changed from yesterday, and what does that relate to me in terms of my open price? My price move opened up 25 cents higher, and now the last price change is 50 cents higher. So what has my market done? It's continued to go in that positive direction. And then the next one I'm going to look at is percent change. And again, I have an opportunity to look at percent change at a smaller time interval, the last day, or 5 days, or 1 month, 3 months, 6 months, year to date, 52 weeks. So yeah, I can add or subtract these as I want. So I'm just going to pick last percentage change, and this is just going to give me a comparative analysis of the change in price from today from yesterday in a percentage. All right. Now notice that, whoops, let me get down here, that my last percentage price change does give me an opportunity to change the field, the data here. I could look for greater than, I could look for less than, I could look for a between value or a field of values. And so again, talking in general terms, if I'm looking at a market who is just a normal day for a stock, what we'll notice is that on any given day, a normal day for any of our stocks, or even the market in general, will range somewhere between 0.5% to about 2%. That's kind of normal for our markets. When our markets are active, you will see much greater percent changes. So, the theory kind of is that, when our market starts going outside of 2%, that could be a sign that our market is on the move, that we're having an extraordinary price movement. And 2%, above 2%, you're probably going to get 3%. And if you can get a market that gives you 3%, you might likely get a higher expectation of 5%, 5% to 7, and 7 to 10, and 10 to somewhere between 12 and 15, and so on and so on. So each of the different levels of percentage will give us another positive expectancy. So again, here we're using a very simple filter to help us find some trading opportunities. So, maybe I'll just say I'm going to look for markets who have a positive percentage change of, let's just say, 0.5%, right? And I've only put in 4 filters, and I've really only defined my market in terms of one of these fields. And if I did my results, notice now that I've almost knocked down my stocks by a third. Now I only have 1,700 stocks to look through. But these are just a few of the things that we're going to look at. So now we have some points of reference. Now we need to start looking at some of those positive expectancies. So one of the positive expectancies that I like to look at is how does my stock relate to the broader market, and in particular the S&P market. And that one would be found under, I believe, our technical analysis. Let me just double check. And that term is called beta. There it is, 6-month beta. All right, on key statistics, there we go. It's found under key statistics. And what the 60-month beta says is that how does our stock relate to the S&P market? So what we're going to do is we're going to call the S&P market a beta, or give it a value of 1, and our stock is going to get a value plus or minus that. So a stock that has a greater price movement compared to the overall broad market is going to have a higher beta than 1. A stock that does not move very volatilely with the S&P will have a beta that is less than 1. So we're going to look at markets that have greater betas. And the reason why is we want to get a lot of more price action when the broader market moves. In other words, if I see the stock market is moving overall up, then I am going to expectancy that the stocks that have a greater beta than 1 are going to move a lot quicker, have a lot more volatility. The old expression that a rising tide lifts all boats. So we're going to look for a greater beta. Now, again, notice that here I can look at my beta in terms of 0 to 0.5%, to 0.5, 0.5 to 1, 1 to 2, and 2 and above. So I want to see stocks that have greater beta. So I want to see somewhere between 1 to 2 or above 2, much higher betas. But again, I could define this, and I might do this later as we go into a little bit deeper instruction. I want to look for betas that, let's say, are 1.5 or above, but I'm just going to keep it kind of general here. And so I want a beta that is greater than 1. In other words, I want to see a stock that is going to move a little bit more volatility, have more volatility than the overall broad market, S&P market. The next analysis I'm going to start thinking about is called, and that would be found in my technical analysis, is something called true range. And there it is, true range. Now, what true range is a technical formula that looks at price over a set period of time in the past, and it's going to make some assumptions. We have what is called the average true range, the ATR. Notice that we do have some defaults here for you: 9, 14, 20, 50, and 100 days. Now, any of those of you who have followed me from different organizations and know that I really like ATR. I think it's a very valuable tool for traders, especially for day traders. I think I consider it kind of the Swiss Army knife of technical analysis because it serves so many functions for us. The main function, though, is ATR is a measurement of volatility. So when the larger the ATR, the more volatile that particular asset or that stock is. But it's more than just that. It's going to be a measuring stick of probability for us. In other words, we're going to use ATR to look to find a range of price, a predictive range of price. Again, that positive expectancy. For day traders, it's a great way to use ATR to help us define some better entries to the market. But I kind of use it to help me find some greater expectations of profit or targeting. I want to find more realistic targets as a day trader. Now, swing traders, yeah. Am I going to be worried about the ATR on a day-to-day basis? Probably not, but I can do a comparative analysis, and we'll look at this a little bit later. I could do a comparative analysis of, let's say, shorter term ATRs, let's say our 9 and 14 days, compared to our longer term ATRs, 20s and 50 days. And that comparative analysis could tell me if my trend is strengthening or if my trend is weakening. So there is some value even as a swing trader, somebody who holds trades from day to day or day to week versus a day trader who is only holding a trade for one day at a time. So Wells Wilder, the creator, one of the grandfathers of technical analysis, designed it around 14 days. So I'm going to add the 14-day ATR to my analysis. And again, I'm going to put this in a certain order, right? And again, I do have fields that I can choose from here. And so let's talk in general terms among this one. Let me get a drink of water here for a second. Excuse me, I apologize for swallowing in front of you. As a day trader, I want to find markets who have good volatility, greater ATRs, and that are going to give me some good trading opportunities. So here, what we're going to think about is, as a day trader, we probably want to find markets that move at least $1 a day, a value of one. But maybe we'll look at markets that move more than $1 a day. That's going to give me some greater opportunities. A larger movement in price in one particular day will give me some greater opportunities to take some little day trade opportunities. For options traders, ATR is a valuable tool for you too, especially for those of you who are going to be doing credit spreads with short thetas, a little bit of time left. You could look at your ATR as a value to say how far could price move today or over the next 2 days or 3 days, and that will allow you to look for strike prices that are a little bit closer to current price because it's telling you the probability that it's unlikely it's going to get outside of the range of the ATR, and that'll allow you guys to look for some greater premiums as you move closer to strike prices that are closer to your current price. Iron condors, again, looking for a range of price. So for those of you who are doing credit spreads and options, this might be an opportunity to use ATR to help you find, the quarters and 50-cent pieces instead of the nickels and dimes in front of the steamroller, so to speak. So I'm going to look for ATR of a value of 1. I'm just going to make this simple here. And again, let's look at our results. Now we've added a beta of greater than 1 and an ATR of greater than 1. And now we've knocked this down to about 462 stocks. Still a lot of stocks to look at, but now what we've got 10% of what is left from what we originally started, that 4,800. Now at this point, I might stop here and just look at these stocks. Now that'd be a lot of stocks to go through, But what I'm going to do is, again, I'm going to cast this wider net. I'm going to throw out a much larger sample size, and then eventually what I'm going to do is I'm going to refine this down. In real world example, palladium miners in Canada, they tell you that they have to dig out 10,000 tons of ore just to find 1 ounce of palladium. So here, what we're doing is we're mining this much larger field of price action to look for some trading opportunities. All right, but I'm not done there yet. If I'm going to use ATR as a day trader, but even as a swing trader, I still need some more points of reference. And so the 2 points of reference that are going to be very important for me as a day trader are going to be hang on, there we go. Back to our price, our high, and a low. And I'm going to move those next to my ATR. Now, what am I going to do with these? ATR is a measurement of volatility, but it's also a predictor of price action. So what I can do is something called an ATR extension. I'm going to say it here. Just listen to it now. If you need to come back to the recording later. I'm going to look at my ATR, and I'm going to add the ATR to my low price, and that's going to give me a projected potential high price. Or I'll take my high price and I'll subtract the ATR, and that's going to give me a projected potential low price. And the final analysis that I'm going to look at, again, just kind of referencing the market, is I'm going to look at my volume, right? And we have volume as it is today, percent change in volume, but I want to look at something called average volume. And here what I'm going to do is I'm going to filter out stocks that have low volumes. And the reason why I want to filter out stocks that have low volumes is those ones tend to have greater price volatility in terms of the distance between our bids and asks. And these are markets that are a little bit more difficult to trade. So I want to find markets that have consistently enough volume to help support my style of trading, either being day trading or swing trading. Now, again, as you become more experienced, you might allow yourself to trade stocks that have lower volumes. But somebody who is just starting to trade, you probably want to start looking at markets or that stocks that have, an average daily volume of, maybe 1 million, 2 million, maybe even as much as 5 million shares a day. But we're going to cast a much wider field. If I'm a day trader, I might, only look at average volume over 5 days. Swing traders, maybe 20 or 50 days. I want to see a larger sample size. So I'm just going to pick 20-day moving average for my average daily volume. And again, here I'm going to be allowed to set that value. And again, I'm going to cast a little bit wider net, 5,000, 50,000, 500,000 shares a day. And I'm going to stick this down at the bottom. Now, why I'm going to stick this down at the bottom is just a filter. Probably not going to reference it as I do my daily, start my exercise, but I just wanted that filter to be working in the background. And the final thing that I'm going to add to my analysis is I'm going to add sector. Now, why do I add sector? Well, I'm going to use this a little bit later in my analysis. But what it might happen for me is, as I'm doing my analysis of my different markets, I might start to notice that one sector or a group of sectors is outperforming the broader market or other sectors, and that could lead me to some trading opportunities. Again, see, I'm kind of just being general here and using larger values, and let's see what our results are. Whoops, what did I do wrong? Small sectors, higher price, ATR, greater value. Something is wrong here. Well, let's do this. Here I've created an opening screensaver, and you can see here the same elements we talked about: last price, open price, percent change, my beta, my ATR is 1, and my value of volume, this large net. And I have 647 stocks that are in here. Now I could go into the flip charts here and just start looking for that price pattern recognition, okay? So here's Allergen. Here's a market that definitely looks like it's a nice strong uptrend, right? Positive expectation, right? American Airlines. Again, you know, I'm filtering out these different stocks, but here's a stock that, you know, the picture doesn't suit what I'm looking for. I'm not seeing an uptrend. I'm not seeing that positive expectancy. You know, it doesn't mean that American Airlines is not a buying opportunity eventually, but it's not filling, you know, the picture, the needs that I want, right? Here's a market that has had an uptrend, but now it's kind of going sideways. So, you know, it's not doing what, you know, the opportunities that I'm looking for. I want to look for a market that is trending higher. Here's one that is trending higher, and it looks like it's ready to make another move to the upside, right? So I can continue to look at those. But at this point, what I might do is I'm going to save this as a watch list. And I could name it a certain value. Now I have already created this watch list, and what I've done is today's date, 7/22. I'm going to call this watch list 7/22, today's date, and I'm going to use this in a moment, a little bit later. And so these are all the stocks that I've cast the net out today that are doing those positive expectations that I'm looking for in the markets, right? Again, I some adjustments to my fields, right? I could say I want to just find stocks that have a positive price change,
Right,
one
John,
cent.
I was going to ask you a question. So you had 600 some results on your screener. What would you suggest to people to try to narrow them down to on a daily basis? Because 647 is still an awful lot of stocks to be looking through.
Again, Gene, we're just mining a lot of things, and then what we're going to do is we're going to create another screener that is going to filter this down in a second. But just let me show you even just some minor changes of our results. I'm only looking for stocks that have a positive number today or have a percent change of 1%. Maybe now I'm going to change my beta to 1.5, right? A greater beta. And maybe I'm going to look for a market whose ATR is 1.5. Again, remember, I was kind of being just general, and here we're getting a little bit more specific. And boom, just some minor adjustments on some very basic filters has narrowed this down to 56. So
Yeah,
just ask,
that's
right?
much easier to, yeah, that's much easier
Yeah,
to
right,
work with.
exactly. So, right. So again, just some minor adjustments are going to make that allow us to do some more in-depth analysis, right? So let's just look at what we've got here. Again, here's our last price, 66.72. The market opened up at 65.93. So price is above the opening price. How much has this gone up? Well, it's gone up about a 0.5%, 6.64% today, and overall it's up about one. It's up 64 cents. It's up almost 1% today, right? What's our ATR? Our ATR is 2.2. In other words, $2.20. And if we look at our low and our high, we can see that so far today that this stock has not reached that potential of $2.20. The difference between our high and our low here is only about $1.20. Well, there could be a reason, and I would tell you to go and look at how ATR is determined. But what might have happened is that our price has opened up higher, and from yesterday's price, we were up 64 cents. So 66.72 minus 64 would be that 66.10. All right, where we opened up, yeah. So again, probably this stock has some more potential, even at this point of the time and day, for price to continue to go even higher, right? $2.20. If I added 220 to my low of 65.93, that would put it above $68. So this, as a day trader, would tell me that there is potential for this market to move higher. All right. Now, Gene, what I've done is to help expedite our analysis here is I created a screensaver that is called, I'm going to call this one Day Trader, and we'll look at some components in here. But what's kind of cool too is if I want to save these, my Day Trader here is giving me 102 stocks, but if I want to save these as a watch list, right, I can save them as a watch list, and let's call this day 22 because today is the 22nd, right? Well, I'm not amending, right? Save it. But we can also send this watch list to ourselves as well. We can uh, send them in our emails. And Gene, again, remind me how to do that. I forget.
I'm sorry,
We're
what were
looking
you?
for the tab for sending our watch list to us.
Okay, so if you save the screener, so let's say you set up all these filters and you'd like to run the same screener every single day. Top right corner of your screen, it says to save the screener. This is going to save the filters so that you can come back tomorrow and run it again at a later
There it is.
time.
There it is. Yeah. So you can have this sent to me in a report, sent me to an email, and save that as well. So that's a nice little feature I like. All right. All right. So here's my day trader. So here's my percentage change. Here's my opening price. Here, what I've done now is here's where I'm going to start using that comparative analysis. Here's our 9-day ATR. Remember, we looked at 14 before. It's going to give me a little bit more sensitive to current price. And here's my 20-day ATR. And so here's where we're going to do that comparative analysis. Abbott Labs, 9-day is 2.44. The 20-day is 2.59. They're comparatively the same. So that's telling me my market is consistently moving $2.40 to $2.60 every day. What we kind of want to look for is, let me see if I can find a good example. Right here and this Alpha Pro Tech, here we see the 9-day moving average is $2.04, where the 20-day is $1.87. Here, what it's telling us is that in the short term, our volatility is getting greater, our price is expanding compared to our 20-day our 20-day moving average. So let's do this. Let's move this over here for a second. All right. So I can get to those. All right. And let's go back to that one we were looking at. Where was it? So which one was it? Oh, here it is, APT, right? So I can go over here to my stock. I'm going to look at it in my chart. And what we should see is a market that is moving in a positive expectations up, driving upward, and probably seeing an acceleration in price. And exactly that's what we're seeing. A trending market that is now starting to accelerate. And this would be a market that I would be interested in trading, right? Not only that, but you can see that, you know, in just a last few days, we have now broken above some recent near-term highs and some highs that go all the way back to February. And this would definitely be a stock that I would be interested that this market is trending higher, and is right? Positive expectations, right? As I'm waiting for this to load, Gene, are there any questions that are popping up here? All right, so here's a 5-day moving average, and here's a 20-day moving average. Again, I could do that, a comparative analysis. Is my 5-day moving average consistently outperforming the 20-day moving average? When they come together or when they cross, that could be a signal that my trend is starting to weaken or that my trend is about to change. I want to see markets maintain last price above my moving averages. That is a positive sign, and we're kind of seeing that developing in these different markets. The other comparative analysis that I'm going to look at is something called relative strength. And now relative strength is kind of like the speedometer of your markets. It's telling you how fast price is moving. Strength traditionally is used to tell us if a market is overbought or oversold. It's a momentum number, right? Think about it like the speedometer in your car. 50 is going to be what we call a neutral RSI, and anything above 50 is telling us that our price is advancing forward or moving higher. So, you know, 55, 60, you know, the market's just starting to gain momentum. When we get into, you know, like highway speeds, like 75, 85, 90 miles an hour, or an RSI above 70, 75, that is a sign that our car is moving very fast, or is moving very fast to the upside. To the downside, we'll look at RSI values that are below 30. That's telling us that price is moving very fast in a downward direction. So that's where we get that overbought and oversold. But I like to also use it as a comparative. Is I want to see markets that are starting to expand, where the RSI is just starting to move in a positive way. That could be a sign that my market is picking up momentum. For instance, here we can see that advanced micro devices, the 9-day RSI is 75. It's telling us that price is moving very quickly in the short term, but on the longer term, it's kind of still just moving along in that direction. Now, again, I could go to the stock itself, and I was just showing you 2 different ways to find the charts. And sure enough, what we see here is that price is moving very strongly to the upside. And like we said, in the short term, the RSI got above 75, a big spike in price. That price has probably gotten a little bit ahead of itself in the short term. I still like this stock, but this might be that cautionary tale where I'm going to wait for maybe a correction in this market, maybe back down in this area to look for a better trading opportunity. I'm not going to just jump into this market because the RSI at the shorter term is telling me that I've gotten a little bit ahead of myself. Okay. Let's go back to our screeners. And again, I could just make some minor adjustments here and really start narrowing down my results. And then I did one for swing traders, somebody who's going to hold trades for longer periods of time, again, days to weeks and weeks to week. And again, here I've just used some very simple strategies, and these are strategies that are provided to us by Barchart. One of the ones that I really like is gap up. How much has our market gapped up higher than the previous day? Gaps are a very positive expectancy for stocks. There's a reason why price gaps up, because sellers have run away and buyers are out there. And that is a very positive sign that a price normally in stock markets is when they gaps up higher, it's probably going to continue in that direction, at least in the short term. I like to look at a 20-day moving average. Again, I want to make sure that my last price is maintaining above my 20-day moving average. That is a positive sign. But a lot of times when price comes back and engages my 20-day moving average, that actually might be a great buying opportunity. But if my price dips below my 20-day moving average, in this case, that would be my cautionary tale that this momentum of this market has changed. Something called the MACDs. Here we're doing that comparative analysis at a higher data set, 20 days versus 50 days. Again, it's very similar to what we did with the ATR. We're going to look at these moving averages from a intermediate time frame, 20 days, 1 month, to 50 days. And you can see here that the bar chart is giving us a buy recommendation on that. 20-day MACD in terms of what we call a signal strength, right? And how much is the strength of it? Is my 20-day moving average accelerating, getting stronger versus my 50, right? And this could be based on a historical move. What has it done over the last year? And then we could look at the strength. Again, is it accelerating? Is it getting stronger from day to day or week to week or month to month, in this case, 20 days to 50 days. And see, bar chart does give us a signal for that. So if I go into my screener, and I pull up these filters, gaps, moving averages, these signals, you notice that I can filter them as well. I could look at buys and sells, or I can look at buy, sells, and holds. Again, I'm just looking from the long side. I'm going to look for my MACDs where I have a strong or maximum signal, or a strengthening or strongest signal. And down here, we also have the bar chart recommendation. And here I'm looking at what is the recommendation for last week. But we can also look at recommendation that was from yesterday, or a week ago, or a month ago, or a year ago. So we have an opportunity to look at how has Barchart looked at each one of these different markets. Now, what I'm going to do here is, remember we talked about that wider net, and we looked at that and click on that larger, and now I'm going to filter that big, all those, I think it was like so, and now we're going to filter them based on this collection of data, and let's see what our result is. 2 stocks, only 2 stocks that we need to really look at today. And so for swing traders, you would say, hey, here I can really manage look at just 2 stocks, not 400, 800 or 600 or 100. I've really narrowed this down, this field down to just those 2 stocks, right? Now, the other thing I can do, which I like to do, let me go back here and turn this filter off. And I'll go to my filter today. I'm looking at a much bigger picture. And this is the final analysis that I would like to do. Here I've set that very refined filters, the strategies that I'm going to look at. And this is why I do the sector. And we can see here that of the 21 stocks, 22 stocks that have been sectored out, a lot of them are telling me that they're in the sector of basic materials, basic materials, basic materials, basic materials, basic materials. So it's telling me today that basic materials is outperforming the rest of the market. Now, if I look at the individual stocks, I do see gold, silver, silver, silver. There's a lot of theme here. And, you know, here we use a sector to discover that there is something going on maybe in the precious metal market. And here's the silver market, the silver futures market. And we can see that for the silver market, an screener now is now pointing out a trading opportunity. A stock screener is pointing out a screening opportunity to trade the futures market. Now, some of us might not trade futures, but we can see that over the last 2 days, we can see that silver prices have really exploded, and that's probably why we're seeing that happening in our sector of silver. But look at this, though. If I go back to stocks, and I go under the industry heat map. And I do see that last month, silver stocks have outperformed the market. Not only silver stocks, but jewelry, non-ferrous mining, right? Mining gold. These stocks have been performing for the market for almost a month now. And this is that correlation that I want to find, right? I'm going to be doing my exercise every day. I'm going to be noticing that those sectors or the stocks that are being outperformed market on a day-to-day basis. And I would have already been in these markets clearly a month ago. What's is kind of nice, what Barchart does for us too, is I can click on that and it tells me different stocks are in that sector. And if I doing that wider nets of stocks on a day-to-day basis, which ones I'm catching, and I'm starting to see that I'm catching these same, what is it, 7 or 8 stocks, that would be a sector that I would start investigating, right? Start looking at it. Now, Barchart's opinion has told us that they already gave us a buy signal yesterday, last week, and even last month, it was giving us a buy signal in this sector. So what in just 50 minutes, think about this, folks. I've taken you from a novice junior trader and taught you the skills of a mutual fund manager. This is all they do. They look at this wider net, they cast it out, they file it down, they filter it out, and they look for some comparative analysis, strengths in sector, strength in market. Now, I might not be trading silver mine stocks because I find them being a little bit volatile, but then I could start looking at ETFs that are related to those different assets, right? Those different sectors, right? And you can see that on a historical basis, over the last top 100 ETFs, look which ones have risen to the top in terms of percentage gain on a year-to-date mining stocks. So you would have already been in this sector. You've already added this to our watch, our portfolio. So in conclusion here, as I grow as a trader, I'm going to start looking at more in-depth analysis. I'm going to look at a lot of different tools. One of the great benefits that we have in Barchart is a lot of these tools have already been created for us. We can find them already laid out for us. We just need to understand how to use these tools. I don't need to have a lot of experience to start looking for greater trading opportunities. My purpose of my screener is going to give me that skill set to the exercise, how to look at markets on a day-to-day basis, how to define what I'm going to be looking for in terms of my strategy, and then those positive expectations that I'm trying to find stocks that are going to perform a way that I believe that those indicators, those filters, those signals are going to do. So again, let me just do this real quick. I don't know if you guys can see me. Hang on.
Yeah, John, before we, there he is. So before we
And
finish up for the session, I do want to remind people that a lot of the information that has been presented here today with using screeners, you need to be a Barchart member in order to use our stock screener. And in the upper right corner of the site, if you're not already a member, there is a sign up button, and all you need to do is sign up, give us an email address, and you create a free account. And once you have an account, you can start saving screeners, you can start saving your watch lists, you can start applying all of the concepts that you learned about today with John's session. And so just wanted to point that out there, and also let you know that if you do have any residual questions, please email our support group, support@barchart.com. They will be able to answer your question and get back to you soon. Somebody's asking the cost of a Barchart membership to use the screener. Screeners are free. You don't have to pay for a membership. The difference is if you sign up for a Premier membership, Barchart Premier, you can get a 30-day free trial. Those allow you to save unlimited screeners, unlimited watch lists, whereas as a free member, you have a limit of 5 screeners and 5 watch lists. So I really highly suggest you try it out. If you don't have an account, sign up for a free account today, and maybe sign up for that free 30-day trial for Premier and check us out. So again, you'll get an email with a link to the recording later on. John, thank you again for today. And
well, thank you. I'm happy to be here. I want to, kind of give you guys a heads up that next week we're going to be looking at some interesting things in the futures tab. We're going to be introducing a new traders futures guide, which I'm really excited about doing. And the other thing I wanted to say is I hope that I raised the bar of your trading education this week. So thank you again for the opportunity, Gene, and I'm looking forward to seeing all of you next time, a week from today.
All right. Thank you very much, everybody. Have a good one. Bye for now.